This is the Real Estate Investing Abundance Podcast. I'm your host, Dr. Allen. I know you're excited to get into today's show, but I have a very exciting announcement to share with you before moving to the show. We've just launched a complimentary and comprehensive webinar that, among other things, shows you how to legally use passive real estate investing to reduce your taxes, recession-proof your nest egg, and take the sting out of inflation. If you are curious to learn more, go to stevetucker.com/webinar. It is complimentary and only takes a couple of minutes of your time. Once again, that is stevetucker.com/webinar. I'll see you in the webinar. Enjoy today's show. Hello, enlightened investors. Welcome back to Real Estate Investing Abundance. What a delight it is to be with you today as we look at diversifying with agriculture. With us is Chris Rawley, and he is the CEO and founder of the Harvest Returns investment platform. Over the course of visiting dozens of war-torn and poverty-stricken countries during his career as a naval officer, he began to appreciate the importance of farming to every single person on earth. As a professional investor, he decided to invest in a farm, but soon discovered that these types of investments were inaccessible to the average person. So he found a solution. He created Harvest Returns in 2016 to democratize investments in agriculture. So Chris, take us into the show and share an experience that formed who you are today.
Hey, Alan, it's great to be here. So my dad was also a real estate entrepreneur. He was an early developer in the 1970s of some of the very first self-storage facilities in Texas. And so when I was a young boy, that was basically my very first job, was working with him, sweeping out units that were empty, cleaning up units that had been sort of abandoned, weed eating, painting, you name it. If there was little odd jobs, I helped him out with that. And of course, it teaches one all the things that a first job teaches people: attention to detail, work ethic, all of those sorts of things. And that memory sticks with me. And it's also the lessons I learned from my father that are one of the reasons that I started Harvest Returns.
Fascinating. Well, take us into the story of how it is actually you, I guess, went from a more traditional real estate investment background to investing in agriculture.
That's exactly right. I had kind of caught the investment bug, both probably from some of those experiences with my father and his business, but also when I got off active duty in the Navy, the very first job I went to was with JLL. It used to be called Jones Lang LaSalle, doing property management in office buildings. And then I started investing like a lot of investors do in residential, and eventually sort of expanded that into land. And at the same time, as you mentioned, when you were going over my biography, I had done a lot of travel with the Navy, and I saw a lot of places where people were just much more in touch with the food they eat and the farmers who produced it, because they had to be. They didn't, have the blessings that we have where you can just go to a grocery store and get year-round any fruit or vegetable you want. People in other parts of the world, they eat what's in season, what's available. So that kind of made an impact on me on how the food system works and how agriculture works. So at the same time, I wanted to diversify my real estate portfolio into something revolving around farming and agriculture. And this is back in sort of the mid 2014, 15. And at the time, there weren't really a lot of options for investors to do that. There was some real estate investment trusts. Many of those were publicly traded. So farmland funds, things like that, which in a large part are correlated with the stock market. So although you might be investing in farmland, you're doing it through a publicly traded company. So you got all the ups and downs with the stock market. It's not very self-directed. You go out and buy a farm. That takes a lot of capital. You have to know what you're doing. That just wasn't something that was within reach for me, and there were very few other methods to do it. So I guess I went about it the hard way. Instead of actually trying to figure out how to buy a farm myself, got together with my partner Austin Manis, and he had grown up on farms, and so we decided we'd work together over the years in various things, and we decided to start this platform to enable people to essentially, we syndicate farming agricultural deals and allow people to invest.
Interesting that you've taken the syndication model from essentially the multifamily and into to farming and to ranching. Well, what are the differences? I think most of my viewers and listeners have a fair idea about syndication in terms of multifamily and self-storage and RV parks, mobile home parks, and those such things, and office buildings. But most of us don't know a whole lot about taking this process into farming. So, what are the differences?
I think maybe it's best to start out with the similarities. The real estate doesn't matter whether it's a mobile home park, whatever, it's land based, right? You have a piece of land, and then the goal is to put the highest and best use, make the highest and best use of that land, whether it's putting a multifamily apartment building on it, putting a residential development, whatever it is. Agriculture is exactly the same. You have a piece of land, and what is the highest and best use of agriculture? So, in our case, the type of deals that we work with, it might be a cattle ranch, a regenerative cattle ranch. It might be an indoor farm. We've done a couple of those where there was maybe an old warehouse district sort of thing, and we those have been converted into indoor farms, hydroponic growing farms. It might be just a piece of empty land where somebody puts up a large scale greenhouse or vineyards or some other type of investment. And just like in real estate, location is what really matters, both on the market. In the case of agriculture, it's what can you grow there? What are the soil types? What's the availability of the water? What is the distribution options for the crops you're growing, whether that's wholesale or you're selling direct to consumer via farmers markets, those sorts of things. So I'd say there are probably more similarities than there are differences, except you're dealing with biological processes. So your tenants are plants and most or cattle or sheep or something like that, rather than people or businesses that you might see with real estate investing.
I guess it would be is the farm manager often partial owner, or is it generally a manager that is hired, or how is that done?
Yeah, most of the investments we do, we're actually investing in the operating company of the farmer or the rancher. Although there's land components, certainly, and a lot of times we've done both debt and equity investments. So there might be a lien on the land. There's usually going to be a debt portion where there might be some bank financing and they need some equity investors. So we syndicate that equity piece and bring those into the operating company. We've done both mature farms and ranches and also what one might consider a startup or early stage company involved in farming and ranching. But usually one commonality, they for the most part, they have experience, who we call sponsors, or experienced operators.
Well, why would an investor want to invest in agriculture product rather than in multifamily or commercial?
Yeah, there's a few reasons that we like. Real estate and agriculture are the two industries that touch every single person on earth. Everyone has to have a place to live. Everyone has to have food. Everyone eats, and the population keeps growing. And so, in the case of agriculture and food production, as populations become wealthier around the world, the one commonality they all have is they consume more calories, and that's a trend that has been in place throughout history and will continue as the population of the world continues to grow. So the demand for food is not going down. In fact, the opposite is true. It doesn't matter what kind of food production, all types of agriculture production, the demand is going up, whether that's animal protein or plant-based protein, fruits and vegetables, you name it, and it's all over the world. So just the demographics are compelling. The second piece we like from an investment perspective is the diversification, similar to what somebody's invested in stocks and bonds, but they same reason they might invest in a multifamily is to get out of stocks and bonds or take some portion of their portfolio out of it. Agriculture is the same way. It's not correlated to the public markets, public equities, and bonds. Of course, we do private investments, private placements, syndications, and so you've got benefits that are very similar to real estate. You might have some tax depreciation. Agriculture has some special sorts of tax write-off depending on write-offs, depending on what you're growing and how you're growing it. And then there's that last piece, which is kind of more intangible, but it's getting in touch with food production, making an impact. we're creating jobs where there often aren't jobs. So in rural areas, small towns, we're also taking, in the case of some of the indoor farms we've done, where they might be in lower income communities, putting farms there. So you're producing fresh food that can be sold locally in the community.
One thing that I think would probably concern, I think, a lot of investors is the aspect that farming and agriculture, even ranching, is dependent upon on the climate and upon weather and things that are totally and completely out of human control. In terms of managing risk, how do you manage risk with those uncertainties?
That's a really important question and a factor for any kind of investment. On real estate, you've got risk management tools like insurance, probably the one that comes to mind for most people, but it's also how professional is the operator, the property manager, because if you're keeping the units full, your revenue is going to increase. And the same thing is true on the ag side. So, maximizing yield to maximize profitability on the operator side, that's very important. Obviously, there is crop insurance in many cases, depending on crop types. So that's one way. There's also, in certain types of agriculture, there's a lot of government backstops, USDA guarantees on the loans, and in some cases like row crops, farmers are even paid not to farm, depending on what the government is doing. We on the market risk side, we tend not to invest in commodity profit types crops. So like wheat and soy, those crops are out there. You can invest in farmland and those spaces, but the things that we do are tend to be premium or sort of unique, niche, higher non-commoditized products. So one example would be grass-fed, grass-finished beef. It's a little bit more expensive. It's a lot of it is imported from places like Australia. And so the domestic demand for domestically produced grass finished beef is growing. And so we supply some of that. Locally grown foods, organic foods, all those are higher margin types of products. So they're sort of shielded from that market risk. And then there's all those black swans like we all experienced during COVID, where supply chains can be disrupted, which is one of the reasons we like indoor agriculture, because you can produce closer to where the food is consumed and do it with less water, less chemicals, those sorts of things. So there's definitely risk, like there is in any investment, but our goal is to make sure that the investors are, one, that all the risk is identified, the risk is mitigated, and there's measures in place to mitigate it, and that it's obviously disclosed to the investors before they decide to invest.
Enlightened investors, if you haven't done so already, be sure and click that like button and also click that share so others can take advantage of the content. And finally, be sure to subscribe so you don't miss a single one of our upcoming episodes. Well, Chris, let's just take a moment here and share with our audience what you offer and how it is they can get in touch with you.
So our platform, we have what we call several offering verticals, and I mentioned a few of those. So the first is grass-fed livestock. We like that because protein consumption, despite a lot of hype, I'd say, about plant-based foods and beyond meat and those sorts of products, the demand for animal protein continues to rise in the U.S. and elsewhere. So we've done grass-fed, sustainably raised livestock, including cattle and also sheep. The other vertical that we like is indoor agriculture, and this is hydroponic greenhouses, large scale glass greenhouses, or smaller urban indoor vertical farms, which are all often in repurposed buildings. And we like that because it's a new trend that's applying technology to grow food. There's been some news recently of some of the larger indoor like hydroponic farms going bankrupt, layoffs, those sorts of things. We've been fortunate that we haven't had any problems with our previous, I'd say we've done 7 or 8 different investments in indoor ag, and they all seem to be doing okay. But we like it because it's growing food close to where it's produced. You're limiting supply chain disruptions. So most people don't realize that if you eat a head of lettuce anywhere in the US, it was most likely grown in Salinas Valley, California. It's shipped across the country, and so that involves obviously cost and fuel consumption and product isn't as fresh or nutritious when it gets to market, say on the East Coast. So growing it in a more local manner makes a lot of sense from both an economic and a number of standpoints. The third vertical that we're in, what we call generally specialty agriculture. We've done things like hazelnut orchards. We've done vineyards here in Texas, actually, that are the company we work with is replicating large scale vineyards that one might see in California with some mechanization and things like that. And then the final category we started doing a couple of years ago when we determined there was a large need for it from the ag community, and that's raising capital for early stage agriculture technology companies. So this is things like sensors that go into the ground to measure soil content, moisture, airborne sensors, biologic tools that replace synthetic fertilizers, things like that. Basically, the application of technology to enhance sustainability and yields in farming. And so we've done some early stage. These are obviously pretty risky types of investment, but for somebody that wants to take the role of an angel investor in early stage agriculture company, we can definitely provide some offerings to do that. And so our minimums on these deals, they range as low as $5,000 up to $25,000. We're like any syndicator, we aggregate the funds and then we invest in the company using a special purpose vehicle. In our case, it's an LLC. And then you're going to get the typical sort of K-1 partnership tax form that you might get with a real estate syndication. We're going to update you on the operating and financial performance on the farm. Durations, it depends of these investments. On the equity side, it might be similar to a apartment sort of multifamily investment where a property or an investment happens. On the equity side. It might take 3 to 5 years to see an exit. We've done debt where you might see an exit from anywhere from 1 to 3, and this is high yield, low single digits type of returns. We've actually got a pretty good exiting and performance with that private credit or private debt investments. And then the third sort of structure we do is convertible debt, and that's usually for these early stage ag tech startups, although we have done those in other sorts of businesses.
And how do they get in touch with you?
Best way for investors to find us is just to go to harvestreturns.com, our website. Of course, we have social media as well, but I think it's a new asset class for many investors, especially if you've been in real estate. So it's important to ask questions and learn before you make any investment. We're happy to help with that and spend some time with the new investors at answering questions and have them on a webinar and those sorts of things to educate them.
And that information is in our show notes. Tell us about the due diligence process and what's similar about that and what's different about that from other more traditional forms of investment.
So we probably see maybe 30 deals a month kind of come across our screens, and of those, maybe 2 might actually make it onto the platform. And where due diligence goes is once that they've kind of made that initial screen, a lot of stuff just gets ruled out because it doesn't look viable. But once we engage with the company to raise capital for them, it's a fairly similar due diligence process as you might see buying, investing in any sort of investment. So we're going to look at the founders. We're going to do background checks on the founders. We're going to look at their track record of whatever they've done, whether that's in business or agriculture. We're looking for teams that have a mix of agriculture background experience, so they know how to grow whatever they're growing, business acumen, so that a lot of people, we see a lot that are very good at growing, but they don't have much business sense. And unfortunately, we see the opposite as well. So to find that right team, do the background checks on the team, kind of look at what they've accomplished and see if their plans, what they intend to do, their business plan makes sense. We're, of course, going to review the financials, both prehistory, the trailing profit and loss and balance sheet, things like that, but also the pro formas for at least the projected duration of the investment. And then we're going to look at other things. Of course, the company's operating history, the formation documents, sales contracts, what in agriculture we call offtake agreements. So they're going to grow all this stuff. Do they have a way to sell it? Do they have agreements in place or letters of intent to buy lettuce or whatever, cattle, whatever the product may be that they're growing? And we're also going to look at more intangible things based on the story that they're telling, and does it make sense? And we do have a bias for sustainability in the investments we do. So we like, as I mentioned, livestock producers that are doing something that's good for the environment, whether that's holistic grazing, making the soil better, making the environment better, preserving biodiversity, preserving watersheds, things like that. So that's kind of the last element of our due diligence process. But most importantly is understanding those risks, seeing that the risk is in place, risk mitigation measures are in place, and then disclosing those. And we do a private placement memorandum and all those sorts of things. They're the SEC Regulation D exempt offering. So many people that might have invested in, say, a apartment, multifamily offering might, pretty familiar with the structure of that sort of private placement memorandum.
Well, agriculture can be very detrimental to the environment, but you have mentioned that you are looking for sustainable operators. Tell us about that journey and why it is that you're looking for sustainability.
Yeah, as I mentioned, people have to be, population is growing. We've got to produce more food, really, than has ever been produced in the history of mankind in a short period of time, as the population has peaked or hit 8 million and 8 billion, excuse me, and will probably peak at around 10 billion in the next 20 years or so. So because of that, it's got to be done sustainably, because there's limited land resources, there's limited water resources, especially in, let's say, the Western US. And there's also problems with runoff and things like that with chemical based agriculture that we see in row crop production, primarily in the Midwest United States, where there's things that we're seeing dead zones and red tides because of the chemicals that are coming down into the Gulf of Mexico from the Mississippi River and other watersheds there. And so because of that, we're on the lookout for farms that are going to produce sustainably, and whether that's saving water, preserving biodiversity. On the cattle side, a lot of people don't understand that cattle kind of gets a bad rap. Livestock production gets a bad rap. Meat in general gets a bad rap. Some of that's marketing hype from people trying to sell meat alternatives. I'd say most of it falls into that category, and it doesn't take into consideration the positive benefits of raising livestock on land that has no other higher best use except maybe drilling for oil, if there happens to be oil on it. And a lot of times, Texas, where I'm from, you'll see cattle and oil rigs or cattle and windmills, especially in West Texas, where we've seen a lot of offerings. And so when you're running cattle, you can do it in ways that make the soil better, that help the soil retain moisture, that prevent runoff, that help the soil capture carbon under the roots of the native prairie grasses. And there's a lot of benefits to that. That one of the things with cattle is, before we had cattle in North America, we had bison, a lot of them, and we had elk and things like that roaming the Great Plains. And now, for the most part, those have been replaced by livestock, but the same processes, biological processes, are in place or can be mimicked with proper grazing techniques.
Well, Monsanto and Cargill kind of have a corner on the agricultural industry, and they are anything but sustainable. How are you competing with those giants?
Yeah, I mean, I would say they're competitors to ours because those companies primarily support the conventional row crop industry with chemical fertilizers and seeds and things like that. And that's just not a business that we're involved in. If somebody wants to invest in that, that's great, but you're really not going to find those types of investments on our website or our platform. So rather than trying to compete with them, we're trying to complement what they do by offering sustainable investments. Farmers that are using these organic production methods, or regenerative methods is a term you'll hear a lot these days. And non-GMO, whatever the term is, there's probably a producer out there that's trying to do that and needs capital help to do that. And so that's kind of what we found our niche to be, is helping some of these non-traditional producers raise money. And that's the other side of our platform is the farmers themselves, helping them expand their operations, develop their operations, or produce more sustainably by applying technology, or grow their regenerative herds or things like that. So the traditional ag banking system just doesn't support it. So because they're more focused on the larger parts of the industries, which is that those row crops that are, operations that are out there buying chemicals from Monsanto, now Bayer, those sorts of companies.
Chemicals and seeds protected by patents, which is unbelievable to me that that was ever legalized. But anyway, different topic altogether. So where do you see the agricultural industry moving and changing in the future?
Yeah, I mean, we do see these sustainable trends happening because consumers are demanding it. Consumers want to know how their food is produced, where it's produced, who's producing it even. And we offer that with these farms that are investable on our platforms. What I call the decentralization of agriculture. So much agriculture production is based in California right now, Salinas Valley, Central Valley, California, that it's not sustainable purely because California's running out of water. They had a bad drought. And then into last year, they got too much water and that wiped out a lot of crops. And they have very poor management practices with their water conservation in California and water retention. So we think that a lot of agriculture in those categories is going to decentralize and be grown indoors in other parts of the country. So we want to be a part of that trend. And then the third sort of trend we see is the technology side, whether that's drones to help farmers monitor their farms remotely, whether it's robotic vehicles to help them harvest and plant and maintain their crops because labor is hard to come by. And in all industries, but especially agriculture, you got a lot of migrant labor there, and it's very seasonal. And obviously, wages are going up like they are in every other industry. So when you can put technology and take some of the people out of the equation, you can produce more food with fewer input cost.
Very interesting, Chris, and a very vital industry, of course, to all of us. So thank you so much for being with us, and thanks for informing us about this aspect of real estate investing.
I'm sorry, I missed that last question, Alan. You froze up for a second.
That was the end of it.
Okay, awesome. I guess we're good. I think you...
Enlightened investors, wait, don't go just yet. I just want to remind you about our recently launched webinar that you will not want to miss. If you're at all curious and would like to learn more about how real estate investing can diversify your investment portfolio, alleviate the anxiety associated with Wall Street swings, leverage your 401ks and IRAs to substantially increase the return on your investment, and do all of this with turnkey, hands-off, passive real estate investments, then you'll want to immediately go to stevetalker.com/webinar. In the webinar, we'll also address the common dubious investment schemes that you want to avoid. To access the webinar, go to stevetalker.com/webinar. I look forward to seeing you in the webinar.
Thank you for tuning in to Real Estate Investing Abundance, brought to you by Steve Talker Capital, a company working for passionate professionals like you to develop financial independence built on solid, passive real estate investments. As part of our efforts to make the world a better place, Steve Talker Capital contributes to activities and organizations committed to better understand the equine. These endeavors attempt to enhance the human treatment of horses worldwide. Steve Talker Capital, working for a world where all creatures, great and small, flourish abundantly. For resources to develop your financial independence, connect with us at stevetalker.com.